Okay, so hello everyone. This is Ahmed Shafi, and I will be conducting your webinar for ACCA P4 Advanced Financial Management exam. Before starting the webinar, I would provide you just for 3 to 4 minutes a bit of guidance how we will move, what is the objective of this webinar, and how you can take the maximum advantage from this webinar. Okay. Okay, so firstly, the exams are near and it's around 25 days left in the exams. Now, this was a very problematic time period, the last few months. The exams got cancelled, and in many locations, still the exams are unable to take place on center-based locations. So it's a bit of hard work for ACCA. They played a very important role in those locations where the exams were unable to be held on centers. They launched the facility of remote exams so that students don't miss the opportunity of giving exams for one more attempt, and rather than if the centers are unable to conduct exams, ACCA gave the students an opportunity to conduct exams remotely. Now, in locations where the exams are being conducted at center, there is absolutely no change for those students, because the way they used to give exams before, they would just continue to give exams in the same manner as before. But for students who don't have the facility of center-based exams, like in many countries, the center-based exams are not being conducted even for September attempt. Now, ACCA provided those students the facility of conducting exams remotely, and remotely means the exams will be conducted at home. Now, for those students who are giving exams remotely or at home, there is a big problem with them, they feel. However, once you attend the webinar, hopefully, I'm quite confident, I'm quite sure that after the webinar, this won't remain the problem. But considering the questions I have been receiving from students, the students who are giving exams at center, they are facing no problem, no change, because they used to give exams before at center. They are giving exams now at center. They are being given the sheets. They have to fill that sheet with the answer, the question paper, the normal answer, paper and pen based exam, that's it. But for students who are giving exams at home, that is called remote exams, they have been asked that remote exams are not possible on pen and paper. Therefore, the exams will be conducted in a computer-based format, computer-based environment. Now, this should not sound like a problem, but many students have panicked. Constantly, we have been receiving numerous complaints, numerous issues that we studied keeping in mind the exams will be held on pen and paper. In the classes, when we were taking classes, we used to solve questions on pen and paper style. Now, suddenly, the exams are being conducted remotely. The exams are being conducted at home, and we are not allowed to conduct exams or have exams with pen and paper style, but we have to answer the exam on computer-based format. So we haven't studied the computer-based format. We are familiar with the traditional pen and paper style, and suddenly the exams are being conducted on computer. So how we will solve it? So ACCA has obviously thought of this, and They have noticed these problems. Therefore, I have been told and advised, and obviously this is for student benefit, that all the questions we will be solving in this webinar over the span of the next 5 days, whatever questions we will be solving, all those questions will be solved on computer-based format, so that students who are giving remote exams, they know the real structure of how the real exam would look like, so that over the span of next 5 days, when they learn how to solve questions on computer-based style, on spreadsheet style, on the traditional exam, on the new exam platform, the platform which ACCA will use in your real exam, their confidence level is likely to shoot up. So for those students who are giving in, obviously because I'm seeing the attendees, they are from multiple countries. So if in a particular country you belong to a country where the exams are being conducted with pen and paper style, maybe possible you won't find these spreadsheets working as a good thing for you, but obviously you can revisit and learn the concepts which I will teach. Just the thing which will be differentiated is that rather than writing the solution on white screen or the whiteboard, I will be solving questions on the ACCA platform, the real exam platform. It's a look like the same real exam platform, so that those students who are giving exams remotely, they learn how to solve questions there, and you can learn the questions and concepts through this. Okay. Now, this webinar is spread over a span of 5 days. And in those 5 days, we will be covering the core topics. We will try to cover the core topics through past paper practice as well. Day one, the first day, we have plans to revisit a core topic of investment appraisal. Okay. On the second day, I will be discussing a topic with you called currency risk. Okay. Day three, we will be discussing interest rate risk with you. Okay. Day four, we will be discussing the BSOP, that's Black-Scholes option pricing theory. Okay. And on day five, we will be discussing mergers and acquisitions. Okay. Now, these are the 5 core areas where AFM students know very well that if they have grip and command on these 5 topics, they're likely to ace exam, because majority marks, I'm repeating, not all the marks, majority marks of the exam comes from these 5 areas. Okay, so we will be discussing all of these areas. Now, obviously, since we are only discussing this webinar over a span of 5 days, and 5 days, 3 hours each means 15 days. So on a daily basis, we will only be able to solve hardly one past paper question of each topic. Like on day one, we will be solving investment appraisal. Like on day two, we will be solving currency risk. Like on day three, the interest rate risk. Day four, BSOP, and day five, mergers and acquisitions. Obviously, you people will want further help, because maybe the questions we would be solving, you don't have any problems with those questions, but you have problems with some other questions. Maybe possible when we teach a particular question, you will have a problem in a certain part. However, I will constantly be giving you time to ask questions in the chat box, the chat portion or the questions portion. However, you might want some further help. So we are here to help you. At the end of the class, what I will do is that I will create a WhatsApp group. Okay. And I will provide you the link of that WhatsApp group here in the chat. Okay. You all are requested to join that group, so that even after the end of webinar today, tomorrow, and even after the end of webinar after 5 days, if you people have any further questions, we can discuss there, and we can remain in touch with each other till the exam date. So we can help you out with any stuff you require. Okay, so let's start now. Our topic for today is investment appraisal. I will just give you a quick information about what investment appraisal is all about, and then we will be moving towards a past paper question. Okay, now after every discussion, I will provide you a certain time period to ask questions in the questions tab. So if you have any questions, you are free to ask in that question tab. However, I won't be checking or answering the questions after every second, because students, there are too many students, everybody tends to ask questions at their time. So when I say that now you are open to ask questions, please ask the question at that time. Now there is just a small question in the chat box which I consider it necessary to answer. That some students are saying that we have an important work in between, or we have to go somewhere. So this session is being recorded by ACCA. So if you have any problems in between, you can always revisit later and view the recording. Okay, so let's start with investment appraisal. Okay. Okay. Now we all know investment appraisal is basically this thing, appraisal, what stands for evaluation. Okay. Whenever we have an investment opportunity in front of us, like people or companies who have extra cash, and this is never a good idea that if an individual or a company has extra cash, they should just let it remain in the bank. Obviously, when you have extra cash, you should invest somewhere. And when you go for investment, there are multiple investment opportunities. So it's not just like that whenever we have multiple investment opportunities, we should just blindly throw our money there. Whenever you have multiple opportunities, you should always first appraise, evaluate those opportunities using some techniques like NPV, net present value technique. Okay, and you should evaluate opportunities through different techniques and then decide whether you should go for that particular opportunity or not. Now, as far as advanced financial management syllabus is concerned, the investment appraisal is divided into two parts. The first part is called domestic appraisal. Okay, and the other part is called international or overseas appraisal. The first part is called domestic appraisal, and the second part is called overseas or international appraisal. Now, domestic appraisal, international, overseas appraisal, these are the two appraisal portions which are present in your AFM syllabus. Domestic appraisal is a thing like that which people usually study in their earlier version of financial management, which is commonly the FM or F9 exam. But P4 or AFM exam incorporates two things, the domestic appraisal and the international or overseas appraisal. Now, what is the difference? Now, in domestic appraisal, the scenario is that let's suppose company is in USA, okay, and it wants to invest in a project in USA. Companies in UK wants to invest in a project in UK. This is called domestic appraisal. That company is based in United States and it wants to invest in a project in United States. Okay, so there is no role of multiple currencies involved. There is no role of multiple currencies involved. Why there is no role of multiple currencies involved? Listen carefully. Now let's suppose if the company is in USA, what is the currency? US dollar. It is dealing in US dollars and it is investing in a project in USA. So if you are investing in a project in USA, what currency will you invest? US dollars. There is absolutely no thing of currencies there. But what is the international or overseas appraisal? International or overseas appraisal is company is in USA, okay, and it wants to invest in a project in Germany. So company is in USA and wants to invest in a project in Germany. Now listen carefully. This is overseas appraisal. That company is based in USA. What is the currency? US dollars. It's dealing in US dollars, but it wants to invest in a project in Germany. It wants to invest in a project in another country, Germany. The currency is euro. So here two currencies are involved. US dollar, the company is dealing in US dollar, and it wants to invest in a project in Germany. Euros. This is a very, very common thing because these days organizations are operating globally, multinationals based in one country, investing in another country, okay, making it more complex. Companies in USA wants to invest in a project in Germany, two currencies, US dollars, euros, wants to import parts from UK. Pound is also involved, okay, wants to import machinery from China. Chinese one is also involved. Wants to outsource labor, Pakistan. Pakistani rupee is also involved. Now, is this just an imagination? No, it happens in real world. Now we all use Apple iPhones. Where is Apple based? USA. But when you look at the phones, made in USA? No, made in China. Samsung, made in Vietnam. The different clothing brands based in US, based in UK. But when you look at the shirts, the tag, made in Bangladesh, made in Pakistan, made in China, made in India. So that's what overseas or international appraisal is, that you are based in one country, but you are investing in a project in another country where multiple currencies are involved. Okay. So basically the investment appraisal, the NPV remains the same, but the multiple currencies role has to be operated. Now, when you are dealing in multiple currencies, obviously you should know that you need conversion rules. When you are dealing with multiple currencies, you need conversion rules, and we commonly say conversion rules as codes. Okay, in currency conversions there are two types of codes. One code is called indirect code and one code is called direct code, as far as currency conversion is concerned, because when you are based in one country and you are investing in another country, obviously you need currency conversion practices. So for currency conversion practices, we have two principles called codes. One code is called indirect code and one code is called direct. What is the difference? When we talk about indirect code is basically a technical name of a sign. Foreign currency over local currency. So whenever you find that foreign currency is in numerator and local currency is in denominator, we call it an indirect code. Like if I'm in Pakistan and I say that I see the rate dollar over PKR. So local currency of Pakistan is PKR. If local currency is denominator, that's an indirect code. Or I'm in UK, I see dollar over pound. So the local currency of UK is pounds. If the local currency is the denominator, we call it indirect code. Okay. In indirect code, we always divide to convert from one currency to another. In indirect quote, we always divide to convert from one currency to another. Okay. Whereas in direct quote, the technical name of sign local currency over foreign currency. So whenever you see local currency numerator, it's a direct quote. Like I'm in Pakistan and I see PKR over dollar. So the local currency of Pakistan is Pak rupees. It's coming in numerator, it's a direct quote. I'm in US, I see dollar over pound. So the local currency of US is dollars. It's coming in numerator, direct quote. Whenever you find that there is a direct quote in the question, we multiply to convert. To get from one currency to another, we multiply. Okay. And whenever you find indirect quote, if two rates are given, lower rate is the buying one and higher rate is the selling one. While in direct quote, lower rate is the selling one and higher rate is the buying one. Okay, I would advise you all that you should note these principles and keep them in your mind. That what is indirect quote? Indirect quote is a technical name of sign where you see that foreign currencies in numerator, local currencies in denominator. Okay, if you find that the question has indirect quote, you need to divide to convert. Okay, and in indirect quote, lower rate is always the buying one, higher rate is always the selling one if two rates are given. Okay, and when you see local currency numerator, foreign currency denominator, it's a direct quote. You multiply to convert, and the lower rate is selling, higher rate is buying. Okay, so I'm just giving you 2 minutes to copy this stuff. Okay, and if you have any questions, you can post it in the questions tab. Basically, quote is a short form for quotation, right? So it's how currency rates are quoted or presented. So basically, you just have to view the question, sorry. And if in the question, we will just be starting a question shortly. So if you see in the question that foreign currency is coming in the numerator and local currency is coming in the denominator, that means it's an indirect quote or indirect quotation, or the currency rates are presented or quoted in indirect form. The rules are to convert, you need to divide, and the lower rate is the buying one, higher rate is the selling one. Okay. And when you see the question, and it says, let's suppose that company is based in USA and wants to invest in a project in UK, and you see the currency rates, that dollar, local currency is coming in numerator. When local currency is in numerator, it's a direct quote. The currency rates are presented in direct quotation form. Okay, you multiply to convert. In that case, lower rate is the selling one, higher rate is the buying one. Now, many people think that currency rates and these quotations only come in risk management currency part. No, if a question is based on investment appraisal and you are tested overseas appraisal, you have to apply quotations or quotes here as well. Okay, now I've been facing and seeing many questions about recordings. I think I have clearly answered them, that the sessions are recorded. So obviously you have to contact the administrator, ACCA one, and you will be getting the recording. Okay. So let's move towards a question of overseas appraisal, to get an idea of how, what I've taught you, how overseas appraisal works, that I am based in one country and I'm investing in another country. Okay, this is overseas appraisal. And obviously, if you're based in one country and you are investing in some other country, you have to convert currencies. I have told you that to convert currencies, there is a principle called quote or quotation. Okay, so whenever you have quote or quotation, they are in two forms. One is called indirect quote and one is called direct quote. Indirect quote or foreign currency numerator, local currency in denominator. You divide to convert. Lower rate is the buying one, higher rate is the selling one. Whereas when it's direct quote, it's local over foreign. You multiply to convert. Lower rate is the selling one, higher rate is the buying one. Okay. So let's move towards the question. And I've told you that we will solve the question. I've been told that we need to solve the question considering the computer-based format. However, if in your country the exams are paper-based, you will still learn a lot. Okay. Now, obviously, in these webinars, we just want to focus on exam practice. You just want to focus on exam practice. So obviously, you won't have much time to copy each and every stuff. Okay. However, you have received the daily study plan, the day 1 notes, the day 2 notes, day 3 notes, day 4 notes, day 5 notes. Okay. So in those notes, I have provided you questions, I have provided you answers, and I've also provided you a spreadsheet file of how those questions need to be presented on a spreadsheet. Okay, so let's start with a question so that you get an idea of overseas appraisal. Okay, now for those students who would be giving exams student Salima, I am addressing you, and what you just wrote in the message, that's incorrect. In direct quote, lower rate is the selling one and higher rate is the buying one. Okay, so for those students who will be doing exams remotely, when you will be sitting on your exam day and you will start your exam, the first thing you will be viewing on your computer screens is this introduction. Okay, and obviously you will read all the instructions. Okay, there is a list of instructions. I want you to pay attention when you will obviously read all these. You need to go to the next page by clicking on next. There are further instructions, the general instructions, the workplace instructions, etc., etc. You need to read them. Next, instructions page number 2, how the navigation works, how the calculator works, etc. Next, workings, how you need to show the workings, how you need to do the works, etc. Next, instruction 4 out of 4, reviewing the exam, how to review the exam, how to end the exam, etc. Next, this is the information page about the CB practice platform, that how this platform works. Now I'm telling you one thing, that those students who are giving exams remotely, ACCA has provided 4 specimen exams with their solutions on their website on the CB platform. So you have the access of platform with you. You can practice the questions there, and you can also view those specimen exams. Okay, but I'm quite confident that this remote exam panicking thing, which is giving you panic attacks, that won't be a problem after the webinar. Okay, so see, if you haven't read all the instructions, it won't move forward. So I need to view the full screen. Here I am, I have read the full screen. Next. Now it states, if you are ready to begin your exam, please click yes. If you are not ready to begin your exam, please click no. So this is a very important thing, that when you are ready, click yes, because when you click yes, the timer will start. Obviously, when you are using the practice platform for your preparation, or here I am using the practice platform, it won't be time constrained. But in exam, once you click yes, the timer will start. Okay, so here I click yes. Okay, now this is your exam pattern. Section A. It reads, this section of the exam contains one question. The question is worth 50 marks and is compulsory. This exam section is worth 50 marks in total. We all know that in AFM P4 exam, the Advanced Financial Management exam, the section A contains one question, it's 50. Okay. Important. In your live exam, you should indicate which requirement each of your responses relate to, so that this is clear for markers. Like in paper-based exams, whenever we are starting any requirement, we clearly mention which requirement we are answering. So here you should also take care which requirement you are following. Show all notes / workings that you want the marker to see. Remember, any notes workings made on the scratch pad on your workings paper will not be marked. Obviously, the rough work is not marked, but you need to show the workings which you want the marker to see. Next. Now here my exam starts. Okay. Okay. This is how your examination screen is likely to look like. Now, I want you to pay attention. Okay. Now on the left side, you will be seeing a title called exhibits. Okay, exhibits. Exhibits are basically the paragraphs of the exam question. Exhibits are basically the paragraphs of the exam question. Like I click on exhibit 1. This is exam question para. Okay. Now, obviously, complete information isn't mentioned in just one tab. So I need to click on exhibit 2. Here it's exhibit 2. There is information about the project. Okay. Exhibit 3, further information about the question. See, I will just read it, just trying to explain you the structure, because I've been told that many people are giving exams remotely, so we need to specifically focus on how this exam platform works. It's your wish. You want to open all exhibits together, it's completely your choice. If you want to just close the exhibits, it's your choice. Okay, so basically the exhibits means the information of the question. Then you have a second heading called requirements. When you will click on requirements, all the requirements will be coming here. Okay. Response options. Now response options, when you click on response options head, response options means answer options. Okay. You have two heads here. Word processor. If you will click on word processor, the word processor will open and you will get the opportunity to type your answers. Okay. Okay, like Ilan. And when you open the click on the spreadsheet option, it will open spreadsheet. Okay, now which one to use, it's completely your choice. Whether you want to give your response or answer on Word, you need to click on Word. And if you want to give your answer on spreadsheet, okay, you need to submit the answer on spreadsheet. Okay. However, it is advisable that any theoretical answer or a discussion answer should come on Word, and any computational requirement, the calculation requirement, should come on spreadsheet. Now, people who are giving exams with pen and paper, they can learn the solution here. It would be very helpful for them. The only difference is that rather than solving on spreadsheet, they have to write this with pen and paper. And obviously you don't need to copy the stuff here, because you need to understand the copied solutions have already been provided to you. Okay, so let's start reading the question. And the question is company Ilanwe, because I want to focus on overseas appraisal with you. Okay. Okay, so let's start. The question is Ilanwe. Ilanwe, whose currency is the Ilanwe rand. Ilanwe, a country whose currency is the Ilanwe rand, has faced extremely difficult economic challenges in the past 25 years because of some questionable economic policies and political decisions made by its previous governments. So Ilanwe is a country, the currency is Ilanwe rand. It has faced extremely difficult economic challenges in the past 25 years because of some questionable economic policies and political decisions made by its previous governments. Although Ilanwe's population is generally poor, its people are nevertheless well educated and ambitious. Okay, Ilanwe's population is generally poor. The people are nevertheless well educated and ambitious. Just a pause. If someone doesn't want to read the question from the screen, you all have been provided the day one set. There, the question of Ilanwe is present. You can read from there. Okay, if you don't want to read from my screen. Okay. So repeating the question, Ilanwe, whose currency is the Ilanwe rand, it's a country whose currency is the Ilanwe rand, has faced extremely difficult economic challenges in the past 25 years because of some questionable economic policies and political decisions made by its previous government. The currency is the rand. It has faced extremely difficult economic challenges in the past 25 years because of some questionable policies and decisions by its previous governments. Although Ilanwe's population is generally poor, its people are nevertheless well educated and ambitious. The population is poor. People are well educated and ambitious. Just over 3 years ago, a new government took office, and since then it has imposed a number of strict monetary and fiscal controls, including an annual corporation tax rate of 40%. So 3 years ago, a new government took office, and since then it has imposed a number of strict monetary and fiscal controls, including an annual corporation tax rate of 40%, in an attempt to bring Yilanwe out of its difficulties. As a result, the annual rate of inflation has fallen rapidly from 65% to its current level of 33%. These strict monetary and fiscal controls have made Yilanwe's government popular in larger cities and towns, but less popular in rural areas, which seem to have suffered disproportionately from the strict monetary and fiscal controls. So I think it was quite a detailed paragraph that Yilanwe, the currency of that country is Yilanwe, and it has faced extremely difficult economic challenges in the past 25 years because of some questionable policies by previous governments. Yilanwe's population is generally poor. The people are well educated and ambitious. Just over 3 years ago, a new government took office, and since then it has imposed a number of strict monetary and fiscal controls, including an annual corporation tax rate of 40%. So the new government which took office, it has imposed a tax rate of 40% to bring Yilanwe out of its difficulties. As a result, the rate of inflation has fallen from 65% to 33%. These strict monetary and fiscal controls have made Yilanwe's government popular in larger cities and towns, but less popular in rural areas. Okay. It is expected that Yilanwe's annual inflation rate will continue to fall in the coming few years as follows. So it is expected that Yilanwe's inflation rate will continue to fall in the coming years as follows. In year 1, the inflation rate is 22%. In year 2, 14.7%. Year 3 onwards, 9.8%. Okay. So we expect that Yilanwe's inflation rate will continue to fall as follows: year 1 22%, year 2 14.7%, and year 3 onwards 9.8%. Okay, so for the next 3 years the inflation rates are given, which is an important thing, that we expect that Yilanwe's inflation rate will continue to fall in coming years. In year 1 is going to be 22%, year 2 14.7%, and year 3 onwards 9.8%. Next, Yilanwe's government has decided to continue the progress made so far by encouraging foreign direct investment into the country. So Yilanwe's government has decided to continue progress made so far by encouraging foreign direct investment into the country. Recently, government representatives held trade shows internationally and offered businesses a number of concessions, including zero corporation tax payable in the first 2 years of operation, and an opportunity to carry forward tax losses and write them off against future profits made after the first 2 years. So Yilanwe's government wants to continue the progress. It wants to encourage foreign direct investment into the country. Recently, the government representatives held trade shows internationally, and they offered businesses a number of concessions, including zero tax payable in first 2 years, and number 2, opportunity to carry forward tax losses and write them off against future profits. So government offering 2 schemes: 1, zero tax in the first 2 years, and number 2, they're giving opportunity to carry forward tax losses. The government representatives also promised international companies investing in Yilanwe prime locations in towns and cities with good transport links. So government representatives also promise international companies to invest in Yilanwe that we will give you prime locations in towns and cities with good links. So there is no further information. That means Exhibit 1 is done. Make the summary of Exhibit 1. Yilanwe, a country, currency is Yilanwe rand, facing some problems. New government came, imposed strict tax rate, and in future the inflation rate is going to be 22, 14.7, 9.8. Government wants to continue progress by encouraging FDI, and businesses are offered 2 concessions: zero tax and opportunity to carry forward tax losses. Okay, the government representatives also promised international companies good locations. Okay, Exhibit 1 is over. Now I should move to Exhibit 2. Let's start Exhibit 2. Exhibit 2 states, iMoney Company, a large listed company based in USA with US dollar as its currency, manufactures high-tech diagnostic components for machinery which it exports worldwide. Now, in the previous exhibit, the information was given about Yilanwe. In the previous exhibit, the information was given about Yilanwe, that it's a country which is facing some problems, and etc, etc. Now the exhibit has shifted towards iMoney Company. Now iMoney is not a country, it's a large listed company based in USA. Dollar is the currency. It manufactures high-tech diagnostic components. After attending one of the trade shows, Imani is considering setting up an assembly plant in Yilandwe where parts would be sent and assembled into a specific component which is currently being assembled in USA. Once assembled, the component will be exported directly to companies based in European Union. The exports will be invoiced in Europe. Now see the link. Yilandwe was a country. The currency was Yilandwe rand. It was facing problems, offering business concessions, etc., etc. Imani company. Imani is based in USA. Okay, dollar is the currency. Imani is based in USA. Dollar is the currency. Imani is considering setting up a plant in Yilandwe. Now listen carefully. Imani is in USA, right? And it wants to set up a plant in Yilandwe, the other country. Is this an overseas investment? Yes, because Imani is based in USA, the currency is dollar. It wants to set up a plant in Yilandwe. So obviously it's a overseas investment question. Okay. So since it is investing in Yilandwe, so look at the next head, assembly plant in Yilandwe, financial and other projections. It is initially assumed that the project will last for 4 years. Okay, the life of the project is 4 years. The 4-year project will require investment of Yilandwe rand 21,000 million for land and buildings, Yilandwe rand 18,000 million for machinery, and Yilandwe rand 9,600 million for working capital to be made immediately. The working capital will need to be increased annually at the start of each of the next 3 years by Yilandwe's inflation rate, and it is assumed that it will be released at the end of project's life. So it is assumed that the project will last for 4 years. The 4-year project will require investment of Yilandwe rand 21,000 million for land and buildings, Yilandwe rand 18,000 million for machinery, and Yilandwe rand 9,600 million for working capital. Obviously, when you are in USA and you are investing in Yilandwe, so all that investment inflow outflow will be in Yilandwe rand. Like I'm in Pakistan, if I invest in a UK project, so all inflows outflows will be in GBP, the Great British Pound. If I'm in USA investing in Europe, so all inflows outflows will be in Europe. So since Imani is in USA and it's investing in a project in Yilandwe, so the inflows outflows investment would be in Yilandwe rand, and that is exactly what the case is. That it is initially assumed that the project will last for 4 years. The 4-year project will require investment of Yilandwe rand 21,000 million for land and building, Yilandwe rand 18,000 million for machinery, and Yilandwe rand 9,600 million for working capital. Working capital will need to be increased annually by inflation rate. Okay, next paragraph. It can be assumed that the assembly plant can be built very quickly and production started almost immediately. You can assume that assembly plant can be built very quickly, production started almost immediately. This is because the basic facilities and infrastructure are already in place, as the plant will be built on the premises and grounds of a school. The school is ideally located near the main highway and railway lines. As a result, the school will close and the children currently studying there will be relocated to other schools in the city. The government has kindly agreed to provide free buses to take the children to these schools for a period of 6 months to give parents time to arrange appropriate transport in future. So you can assume that the plant is being built very quickly, production starting immediately because the facilities are in place, the plant will be built on the premises of school will close, etc. Exhibit 2 is over. So I now need to open exhibit 3. Exhibit 3. The current selling price of each component is euro 700. The current price means today's price. And this price is likely to increase by average European Union rate of inflation from year 1 onwards. Okay, so the current selling price of each component is euro 700. This is likely to increase by European Union rate of inflation from year 1. So you are provided with selling price. It's euro 700. The number of components expected to be sold every year are as follows. So the number of components expected to be sold every year are: in year 1, 150,000 units, in year 2, 480,000 units, in year 3, 730,000 units, and year 4, 360,000 units. So it's very easy. The selling price of each component is provided and the units are provided. You can multiply them to get revenue. Okay. Then it states the parts needed to assemble into the components in Ylandwe will be sent from USA by Amini at a cost of $200 per unit, from which Amini would earn a pre-tax contribution of $40 for each unit. So the parts needed to assemble the components will be sent from USA by Amini. Amini is in USA. The parts needed to assemble the components will be sent from USA by Amini at a cost of $200 per unit, from which Imani would currently earn a pre-tax contribution of 40 per unit. However, Imani feels it can negotiate with Ylandwe's government and increase the transfer price to $280 per unit. So obviously, you need some parts to assemble the components in Ylandwe. These parts will be sent from USA by Imani at a cost of $200. However, Imani feels it can negotiate with Ylandwe's government and increase the transfer price to $280 per unit. The parts needed will be sent from USA at a cost of $200 per unit. But Imani feels it can negotiate with government and increase the price to $280. Now, always remember, investment appraisal is being done on a prudent basis. What is prudent basis? That if Imani feels that it can increase the price to $280, you always have to take the increased price in your appraisal. The parts needed will be sent from USA by Amini at a cost of $200 per unit. It is costing $200, but Amini feels it can negotiate with government and increase the price to $280. So in your appraisal, you will take the price $280 because you have to be prudent. Increased expenditure, reduced revenues. Okay. The variable costs related to assembling the components in Ylandwe are currently Ylandwe and 15960 per unit. The current annual fixed cost of the plant are Ylandwe and 4,600 million. All these costs, wherever incurred, are expected to increase by that country's annual inflation every year from year one onwards. So the variable costs related to assembling the components are currently Ylandwe and 15960. The current annual fixed costs are Ylandwe and 4,600 million. All these costs are expected to increase by that country's annual inflation every year from year one onwards. Okay, next. Amini pays tax on profits at an annual rate of 20% in USA. So Imani pays tax on profits at an annual rate of 20%. Okay. The tax in both USA and Ylandwe is payable in the year the liability arises. So tax is payable in the year the liability arises. A bilateral tax treaty exists between Ylandwe and USA. So bilateral treaty exists. Bilateral treaty exists means it's a treaty between Ylandwe and USA that if you pay tax in USA, you won't be charged tax in Ylandwe. And if, let's suppose, this bilateral treaty is very important, like you are in USA, Imani, and you invested in Ylandwe, you paid tax there. Now when you brought your money back to USA, again you have to pay tax, so your business will suffer. So countries have a bilateral treaty. Bilateral treaty means if you have paid tax there, no need to pay tax again. Tax allowable depreciation is available at 25% per year on machinery on straight line basis. And tax allowable depreciation is available on machinery on a straight line basis. So obviously depreciation is not allowable on land. It's only available on machinery. Okay. Imani will expect annual royalties from the assembly plant to be made every year. Imani is in USA. It expects royalties from the assembly plant to be made every year. The normal annual royalty fee is currently $20 million. But Imani feels it can negotiate this with Ylandwe's government and increase the royalty fee by 80%. Once agreed, this fee will not be subject to any inflationary increase in the 4-year period. So Imani is in USA. It is investing in a project in Ylandwe. Imani expects annual yearly royalties from assembly plant. The normal annual royalty fee is $20 million. Annual royalty fee is $20 million. Imani expects that from the plant. But Imani feels it can negotiate this with government and increase the royalty fee by 80%. So again, if they are thinking to increase it by 80%, again, prudence says you need to increase it by 80%, make it 36 million, increase by 80%. Once agreed, this fee will not be subject to any inflationary increases. Okay. Then, if Imani does decide to invest in assembly plant in Ylandwe, its exports from USA to EU will fall and it will incur redundancy costs. If Imani decides to invest in this assembly plant, its exports will fall and it will incur redundancy costs. As a result, Amani's after-tax cash flows will reduce by the following amount. So the cash flows will reduce by these amounts. Year 1, 20,000, redundancy and loss contribution. Year 2, 55697, then 57368, then 59089. Next, Imani uses its cost of capital of 9% to assess new projects. However, finance director suggests that Imani should use a project-specific discount rate of 12% instead. You know that in investment appraisal, you need a cost of capital. So Imani normally uses cost of capital of 9%. However, finance director suggests that it should use 12%. Okay, now other information. Current spot rates. Euro per dollar, Euro 0.714 per dollar. Yelanver rand per euro, Yelanver rand 142 per euro. Yelanver rand YR per dollar, YR 101.4 per dollar. These are current spot rates. Spot rates means today's rates. Now see, that's what I was talking about, the quotes. That's what I was talking about, quotes. That sometimes rates are euro per dollar, Yelanver rand per euro, Yelanver rand per dollar. So when I will solve the question, I will tell this in detail that you have to carefully monitor. If foreign currency numerator, local in denominator, indirect quote. And if local in numerator, foreign denominator, then direct quote. But rates, you can see some rates are euro per dollar, some are Yelanver rand per euro. However, these are spot rates, today's rates. Now you are given forecast future rates. So for Yelanver rand per dollar, you are given rates of 4 years. Year 1 is 120.1, year 2 is 133.7, year 3 is 142.5, year 4 is 151.9. Okay. And you are also given forecast rates for Yelanver rand per euro, 165, 180.2, 190.2, 200.8. So you are given a spot rate. Spot rate is just the today's rate. And then you are given forecast future rates for 4 years. Then you are given with inflation rates. The European Union inflation rate for the next 2 years is 5%. The European Union inflation rate from year 3 onwards is 4%. And the USA inflation rate from year 1 onwards is 3%. Okay. That ends the exhibit. So all 3 exhibits have ended. Now, if we just make a summary, what the question was all about. In the first exhibit, which is on your screen, you were just given information about a country Yelanver. The currency is the Yelanver rand, and the problems, the inflation rates, and it has offered concession, zero tax payable, and opportunity to carry forward tax losses. In exhibit 2, there was something about Amani company that is based in USA. Dollar is the currency. It wants to set up a plant in Yelanver. So obviously the investments would be in Yelanver rands, the 21,000 million land and buildings, machinery, etc., working capital. And then the exhibit 3 was a very detailed one. What is the selling price? What were the units to get revenue? There were some parts needed, which costed 200, but it wishes to negotiate with government to increase the price to $280. Obviously, we need to be prudent. The variable costs are 15960, fixed cost 4600 million rands, tax rate is 20%. Bilateral treaty exists. Imani wants royalties as well from the plant, and there is some redundancy contribution, the discount rate, and you are given with spot rates and the future rates. Okay. Since the exhibits have ended, the question has ended. I need to open the requirements tab. Okay. Requirement is just worth 5 marks. Discuss the possible benefits. Discuss the possible benefits and drawbacks to Imani company of setting up its own assembly plant in Yelanver compared to licensing a company based in Yelanver to undertake the assembly on its behalf. Repeat. Discuss the possible benefits and drawbacks to Imani company of setting up its own plant in Yelanver compared to licensing. Okay, you need to discuss the possible benefits and drawbacks to Imani company of setting up its own plant. Imani wants to set up its own plant in Yelanver compared to licensing. Okay, just pay attention quickly. Now, if I'm in USA and I want to enter into, let's suppose, another country, UK, the overseas appraisal. There are two ways to enter in that market. One is called FDI, the foreign direct investment, okay, and one is called licensing, okay. If I'm in USA and I want to enter into UK market, I have two options of overseas investment. One, FDI, foreign direct investment, on one is licensing. What is the difference? In foreign direct investment, I am in USA, I want to enter into UK market. Foreign direct investment means I will invest all money myself, build a setup, hire employees, train them, and run the setup myself. Build factory, build premises, everything will be done by me. This is foreign direct investment. The small route is licensing. If I am in USA and I am entering into UK markets, I want to enter into UK markets, increase my presence in UK. No need to make such investment. Just enter into a licensing arrangement with a UK company. Give them a license, gain certain fees. They will set up everything. Everything will be done by them, and they will pay you monthly fees or a profit share or etc. It's completely depends on your arrangement. So many companies you see, the people here are from different countries. So many people see in their countries that there are some brands, foreign brands, who wanted presence in your country. They opted for FDI, foreign direct investment. They invested all the money themselves, opened the shops, hired workers, trained them, did everything themselves. All revenues and costs are in their control. But some brands preferred licensing. They wanted to increase presence in your country. They just gave license to a local person. He built up everything, the shop, the factory, the outlet, whatever. He runs the setup and pays the main company some amount every month or a profit share every month. Okay. Now everything has its benefits and drawbacks. Okay. Here in this question, as you can see, iMoney is a listed company based in USA. Okay. iMoney is a listed company based in USA. Dollar is the currency. Manufactures high-tech diagnostic components for machinery, which it exports worldwide. After attending one of the trade shows, iMoney is considering setting up an assembly plant in Yellandway. iMoney is in USA. It is considering not giving a license to anyone. It is considering setting up a plant in Yellandway. Obviously, iMoney is in USA. It wants to increase its presence in Yellandway. It has two options. The first option, it can give license to a local Yellandway company to do everything on their behalf and just get the monthly amounts. However, iMoney is in USA. If it wants to increase its presence in Yellandway, it can set up a plant, FDI. So iMoney is considering setting up a plant in Yellandway, and that's what your requirement asks. Discuss the possible benefits and drawbacks. You need to write both possible benefits and drawbacks to iMoney company of setting up its own plant in Yellandway. What are the benefits and drawbacks if you set up your own plant compared to licensing? Okay, now obviously you have the complete answers with you, but I just want to teach you two things: the idea that what is the answer, and secondly, how to write it in the remote computer-based exam. Okay, now first you have to decide if you want to answer part A, possible benefits and drawbacks of setting up own plant. Own plant setup means FDI, foreign investment, not licensing. So what are the benefits and drawbacks of setting up own plant? 5 marks, you need 5 marks. First decision, you have to decide whether you want to answer part A on response option, word processor or spreadsheet. It's your choice. Okay, but since it seems like a theoretical requirement, so it is better that you answer it on Word. Okay, now you open the word processor. Okay, and I'm answering part A, benefits and drawbacks of setting up on plant. Okay, now if you are giving exam on a traditional pen and paper style, like people there, obviously they will write this answer. whereas the people giving on computer screen, they will type on this word processor. Okay, let me tell you one thing very interesting. People feel worried about computer-based exams. In fact, it will save a lot of time for you. Now, you need to answer part A. Okay, if you're giving exam on pen and paper, you have to write the heading. Write your answering part A. Here, it will save your time. Copy this from here. Copy. Paste. Okay, so I'm answering part A. And it's just have to modify. Okay, so there I don't have to write it, I just copy pasted it. And if you want to make it bold, then bold it. You want to do it underline, you can underline it. This is your heading. Okay, so I need to write the benefits and drawbacks of setting up own plant compared to license. Okay, the first point. What are the benefits if you set up your own plant compared to licensing? What is the benefit if you set up your own plant, you invest yourself rather than giving someone license? I'm just writing the short forms because the detailed answer is with you. I've already, because we're short of time here. All trade and technological secrets remain with the company. So if you invest your own money, set up your own plant, don't give license to anyone. The trade and technological secrets remain with you. Okay. Now, if you give license to someone, you have to share your trade secrets, your recipe secrets, your manufacturing secrets with them. But if you set up your own plant, you are the investor. All trade and technological secrets remain with the company. Okay. Second, employees get motivated because they might get opportunity to work abroad. So whenever you set up your own plant, obviously your current employees may get motivated because they think that if the company has expanded, it has gone to another location, we may be transferred there and we may get the opportunity to work abroad, which is a good thing for anyone. Financial image improves in the eyes of public. Obviously, such a big thing, such a big investment done by the company. It's a very powerful company. The financial image improves because licensing is also thing that the company has expanded. But in licensing, you know that the company hasn't invested. Here, the company has invested everything. So obviously, this may improve financial image in the eyes of public. Okay. You want to separate? It's up to you. No need to write again on computer specifically. Now, just copy paste Drawbacks. What are the drawbacks? Setting up on plant will be extremely costly compared to licensing. You all know that if you set up your own plant, it will incur huge costs, whereas licensing is a bit cheaper. Okay. Back off is very difficult in FDI compared to licensing. These are just the key points. You need a bit of elaboration, and you can read the answers for that, which I've provided you. What is back off? Now, once you go in another country and suddenly it's some political situation worsens there or some fiscal situation worsens there, and you decide to pull back. And licensing, pullback is easy. You haven't invested much money yourself. You just have to eliminate the contract, penalty, settlement, that's it. But in FDI, you have invested money yourself. So backing off from that, such a huge cost outflow will be lost. It's very difficult. Okay, so these are the benefits and drawbacks of setting up own plant. You have submitted answer on remote screen, the computer-based exam on a word processor. However, if you're giving exam paper-based, you just have to write. Okay, so if you want to quickly note the key points, you can note, and in the meantime, I can just check the questions tab. So if you have any questions with respect to this part, you can ask. So majority of the questions are relating to exam portal. So yes, calculator is allowed. WhatsApp group link, I'm just sharing. You can copy from the questions. If you haven't received the material, you should contact ACCA team. Computations are allowed on word processor. You can highlight. You can make markings. Yes, Prita, I will make sure that it's emailed to you. I will ask the ACCA team. Yes, Minal, you are right. Yes, you can write one-line computations. Yes, shortcuts will work. Jakar, it's emailed to every student attending. Shilpa, for that, you should better refer to the answer provided. Omar, you have to elaborate the points a bit. Yes, Mira. Ishmael, I meant with back off that if you start entering into another country and suddenly the tax laws change or the political situation changes and you need to pull back your investment, licensing is easy because you haven't invested your money. But in foreign investment, if you have set up your own plant, all money is invested by you. It will be very difficult to pull back that money. Salima, pointer style is acceptable, but obviously you need to elaborate them further. Foreign direct investment. Winston, FDI means foreign direct investment. Okay, so one general question which I didn't answer here, that there are many students who are asking that is the pointer style acceptable? Yes, they are acceptable. Okay, you can either opt for paragraph style as the examiner or the pointer style, but these are just the central points. You need to elaborate them in 1 or 2 lines. Pointers are acceptable. You need to elaborate them in 1 or 2 lines. Examiner answers usually tend to be very, very detailed, but these are ideal answers. Examiner states themselves in the marking scheme that for 5 marks, you need 5 valid points. If 5 valid points are elaborated in a specific form, then it's fine. It's to the point in a small elaboration, 1 or 2 lines, you will gain mark. Secondly, obviously there are many hundreds of students attending this webinar. So since I have conducted this webinar before as well, it's a small request to everyone that everybody wants to cover those topics and those questions in which they have problem. Okay, and obviously that can be the case that every person is catered and person wants to learn the topic in which he has problem. Okay, so that's why I'm making the WhatsApp group. Okay, if your concerned question or concerned topic isn't covered here, you can just refer to me. Okay, so now we have discussed the benefits and drawbacks of setting up own plant in Ilanwe. Now we will move towards the second part. Okay, now this is the second comment. You need to prepare a report which evaluates the financial acceptability of the investment assembly plant in Ilanwe, discusses the assumptions made and other risks and issues which Amini should consider, provides a reasoned recommendation. So there are 3 things in this report. And the first thing, you need to prepare a report which evaluates the financial acceptability. Okay, you know, if you want to evaluate the financial acceptability of investment in assembly plant, financial acceptability is evaluated via NPV. If you need to evaluate the financial acceptability, you need to refer to NPV. So we will compute the NPV, but I just want to spare you for 3-4 minutes because since it's a very detailed question, okay, I want you all that you just read the question quickly in a fast forward mode yourself, so that when I start the solution, you know from where the values are coming. Okay, so just quickly read the question so that we can evaluate the financial acceptability through NPV. Okay. Okay, so as per the summary of the question, Yilanwe's currency was Yilanwe rand. It faced extremely difficult economic conditions in the past 25 years because of some questionable policies and political decisions made by previous governments. Yilanwe's population is poor. Tax rate has been increased to 40%, and inflation has fallen. So for the next 3 years, the inflation rates are given in Exhibit 1, 22, 14.7, 9.8%. Okay. Government has offered business two concessions. Number one, zero tax payable in first 2 years, and number two, opportunity to carry forward tax losses. Okay. In Exhibit 2, there was a Imani company. It's a large listed company based in USA. It wants to invest, set up a plant in Yilandwe. So setting up a plant in Yilandwe project will last for 4 years. Investment 21,000 million land and buildings, 18,000 million machinery, 9,600 million working capital. And working capital needs to be increased at the start of each of the next 3 years by Yilandwe's inflation rate. Okay, and it will be released at the end of project's life. Okay, and it can be assumed plant will be built quickly, production started immediately, etc. Exhibit 3, the financial information. Current selling price euro 700. This price is likely to increase by EU rate of inflation from year 1 onwards. Okay, and number of components sold every year, year 1, 2, 3, 4. The parts needed will be sent from US at a cost of 200 per unit, and Imani feels it can negotiate with the government, increase the price to $280. So being prudent, we need to take the increased price. The variable costs are currently Yilandwe rand 15,960 per unit. The fixed costs are Yilandwe rand 4,600 million, and costs will increase by the country's annual inflation. Company-based tax at of 20%, pilot equity exists, it wants royalties, etc., and the rates are given. Okay. Now the requirement is prepare a report which evaluates the financial acceptability of investment in assembly plant. Okay, discusses the assumptions. Okay, and provides a reasoned recommendation. Okay, so obviously you have to gain professional marks here as well. Okay, so you need to make a report which evaluates the financial acceptability. Okay, so obviously a report is a discussion thing. Report is a discussion thing. So it is advisable again that report should be made on word processor. Okay. So in responses, I go to word processor. Okay. I copied these requirements and I am pasting them in the response. So as you all know that 3 requirements means 3 different heads. Evaluates the financial acceptability of investment, assembly plant in Yilandwe. Okay. So obviously, if you want to evaluate the financial acceptability of investment in assembly plant in Yilandwe, to evaluate the financial acceptability, we calculate NPV, right? Okay. But obviously, NPV can't come in Word. NPV is a calculation thing. Better to answer it on spreadsheet, or obviously the people who are answering in paper-based exam, they will answer their normal thing on paper. So it is better that don't show the calculations here in Word. Rather than this, if you want to evaluate the financial acceptability, and you want to show the workings in spreadsheet, so I can write Appendix 1 evaluates financial acceptability through NPV, which is found to be whatever the answer is. So Appendix 1 will evaluate the financial acceptability through NPV. I can't state the calculation here in Word, not advisable, will take a lot of time. It will just be like same as paper-based exam, whereas spreadsheet is going to save your time. So refer to Appendix 1 that it evaluates the financial acceptability. However, if you think that requirement 2, 3 are discussion requirements, you can write the theoretical answer there. But for calculation, refer to spreadsheet. So in Appendix 1, we will evaluate the financial acceptability through NPV. And we can open the spreadsheet. Okay. In spreadsheet, we are writing here Appendix 1, so that the marker knows that what you have done. And in Appendix 1, you are evaluating the financial acceptability via NPV. Okay, so let's start with the NPV workings. Okay, now you all know that for NPV, it's a 4-year project. So we made 4 years, 0, 1, 2, 3, 4, and we have to write all the details and stuff here in the cells. I will just make sure that people who are giving paper-based exam, they have to just write the stuff on their papers, and these people who are giving computer-based exams, they have to write the stuff on Excel. However, Excel and spreadsheet will save time. That's why in future, you all know that in future, further exams are also being conducted through computer-based exams as well in future sessions. Okay, so let's start. So you were, how many was in USA? It invested in a project in Yilanwe, so obviously the inflows outflows will be in Yilanwe rands. Okay, let's start. See, it is initially assumed that the project will last for 4 years. So I have made the 4-year cycle. The 4-year project will require investment of 21,000 million Yilanwe and land and buildings, 18,000 million for machinery, and 9,600 million for working capital. Okay. So there are 3 investments. Okay. The first one is investment in land and buildings. Land and buildings. And you are writing it in Yilanwe rands because Imani was in USA investing in a project in Yilanwe. So all inflows, outflows will be in Yilanwe rands. So 21,000 million land and buildings investment in Yilanwe rand. You all know that investment is an outflow at year 0. So you need to write negative 21,000 land and building. Okay. And plant and machinery investment again in Yilanwe rand. 18,000 million, so negative 18,000. Okay. Working capital, I will discuss it later due to a reason. Okay. So you have written investments. Okay. Now, since people who are familiar with investment appraisal, that once you get an idea about investments, that you wrote investment, land and building, Yilanwe rand 21,000 million, and the plant and machinery, that's Yilanwe rand 18,000 million. Okay. Then working capital, I will discuss it later. After that comes the revenue. After both of these things comes the revenue. Now remember this thing, that since iMoney is in USA and it wants to invest in an assembly plant in Yilandwe, so all inflows, outflows transactions would be in Yilandwe. Okay, since iMoney is in USA and wants to invest in an assembly plant in Yilandwe, so all inflows, outflows will be in Yilandwe, right? You all know that revenue is selling price multiplied by units. You all know that revenue is selling price multiplied by units. So you need to show the working, mention working one. You need to show the working, mention working one. You can show it downstairs. It's your choice. Just get an idea. Okay, I need to write revenue. Revenue is units times selling price per unit. Units times selling price per unit. Okay, you will get revenue. Okay, now please pay attention. So what are the units? It's 150,000 units, it's 480,000 units, and 730,000 units, and 360,000 units. Okay, these are the units. So since I'm taking everything in millions, right? You remember that Yilandwe ran 21,000 million for land and building. Yilandwe ran 18,000 million for plant and machinery. So units, it is advisable you should take in millions. So 150,000 units means 0.15 million. 480,000 units means 0.48 million. 730,000 means 0.73 million, and 306,000 means 0.36 million. Now pay attention. These are the units. I've taken the units in millions, right? And I need to multiply it with selling price. Now what is the selling price? The current selling price is euro 700. Current means today's selling price is euro 700. And this price is likely to increase by EU rate of inflation from year one onwards. Remember, the current selling price is today's selling price, zero selling price. It is increasing by EU rate of inflation from year one onwards. What is the EU rate of inflation? For the next 2 years, it's 5%, and for year 3 onwards, it's 4%. Okay, so 5% and 4%. So the current selling price is 700. But this is current year 0. You are writing for year 1. This is increasing by EU rate of inflation from year 1. So EU rate of inflation is 5% for the next 2 years, right? And then 4%. So you need to multiply it with the increase figure 5%, 1.05 or 105%. Okay, then this 735 needs to be multiplied by 5%. Okay, then this 1.75, or you can take here, pay attention. Rather than taking the 735, you could have just selected the cell. Cell is N4. Same answer. Then after 5%, it's 4%. So you need to take the cell O4. O4, steric 4%. Okay, and then T4, steric 4%. Okay, I've got the inflated selling price, I've got the units. I just need to multiply them to get revenue. Now, how will you get revenue? It's very easy. Equals to. How is the revenue recorded? It's N3 multiplied by N4. No need to use the calculator. N3 multiplied by N4. So equals to N3, 0.15 million units. Steric, N4. Okay, enter. 110.25 million. Okay, now no need to repeat the calculations. It's saved in Excel cell. Okay, that you multiplied N3 with N4. If you want to repeat this process again with O3 into O4, P3 into P4, it's up to you. Or you can simply place the cursor here and drag all the values here like I'm doing. See, everything is automatically calculated. See, when you click on this cell, 370.44, it's O3 into O4, automatically done. See here, Q3 steric Q4, automatically done. See here, Q3 steric Q4, automatically done. You can drag, and if you are not comfortable with it, obviously you will be needing practice for this. You can just drag it, or you can work around yourself. Okay, so this is the revenue, but the problem is that selling price was in euro. So when you multiplied with units, you got the revenue in euros. Okay, here comes the problem. I am in USA and I'm investing in Yilandwe. So all inflows, outflows have to be in Yilandwe rands. All inflows, outflows have to be in Yilandwe rands. So investment is in Yilandwe rands, 21,000 million negative, plant and machinery, 18,000 million negative, revenue also has to come in rands. This revenue is in euros because the selling price was in euros. Okay, so I need to bring revenue in Yilandwe rand. Now to convert revenue from euros to Yilandwe rand, you need an exchange rate having relation of euro and rand, right? To convert revenue from euros to Yilandwe rands, you need an exchange rate having euro and rands. Obviously, you need to convert euro to rands. So you need an exchange rate having euro and rands. Let's go back to the question. You have an exchange rate having euro and rands. Why this first trade is not feasible for me, this one? This is Yilandwe rand and dollar. I have to convert euro to rand. So I need a relation of rand and euro. Okay, so these are my rates: 165, 180.2, 190.2, 200.8. $165, 180.2, 190.2, 200.8. Okay, these are the exchange rates. Now the $1 million question. You need to convert revenue in euros to rands. You need an exchange rate having euro and rands. Now the $1 million question. This rate was Yilandwe rand per euro. Whether you should multiply to convert or divide to convert, revenue in euros has to be converted in revenue in Yilandwe rands. You have an exchange rate of Yilandwe rand and euro, whether you should multiply or divide. Now listen, where are you at the moment? At the moment you are in Yilandwe because you have invested in Yilandwe. So at the moment you are in Yilandwe. What is the currency of Yilandwe? It's the rand. You are in Yilandwe at the moment. What is the currency? Yilandwe rand. Is this currency in numerator or denominator? So this currency is coming in numerator. You can observe here, the currency Yilandwe rand is coming in numerator. So since you are in Ilanwe at the moment, you invested in Ilanwe, and the currency of Ilanwe, local currency Ilanwe, is coming in numerator. It's a direct quote, and in direct quote you multiply to convert. So to convert it, you need to multiply this 110.25, which is in N5, static exchange rate, N6. No need to perform further workings. Just put the cursor here and drag it till the end. You get the values. Okay. Once you have got all the values, you just need to copy and paste them for all 4 years. Okay, that's it. Okay, so this is how you got the revenues value, and the workings are right in front of you. That we all know that revenue is obviously generated by multiplying with selling price into units. So I inflated the selling price, I inflated the selling price multiplied with the units to get revenue. But the problem is that since I am in USA and I've invested in Ilanwe, so all inflows outflows have to be in rands. So since it's in euros, I need to convert it into rand. I need an exchange rate having rands and euros. So either multiply or divide. Okay. So since it was Ilanwe rand per euro, I am in Ilanwe. It's in numerator. It's a direct quote, multiply. Okay. Now I will be taking questions, but just give me 5 more minutes. After revenue, we all know comes variable cost. Okay. And variable cost also has to be in Ilanwe rand. Okay. And for that, I need to mention working too. Now, how do you reach towards working to? Copy all this stuff, saves time. Okay, so units are there. This time you don't need to multiply units with selling price per unit. In fact, you need to multiply it with variable cost per unit. You need to multiply it with variable cost per unit. Okay, so what is the variable cost in the question? See, the variable cost related to assembling the components in Ilanwe are the variable cost related to assembling the components in Ilanwe rand 15960 per unit. The current annual fixed cost is Ilanwe rand 4,600 million. All these costs wherever incurred are expected to increase by that country's annual inflation every year from year 1 onwards. So the variable cost related to assembling the components in Ilanwe are currently means today, Ilanwe rand 15960 per unit, and the current annual fixed costs are 4,600 million, and these costs will increase by the country's inflation rate from year 1 onwards. Okay, so the country's inflation rate of Ilanwe is not given here. Remember, 22%, 14.7%, and 9.8%. Okay, so go back to the solution. Need to delete these steps. Okay, so it was Ilanwe rand 15960 per unit and was increasing by, in year 1 inflation rate 22%, I increased it by 22%. Okay, Then after 22%, it's 14.7%. So I will be increasing this cell N10, sorry, N11 by 14.7%, 1.147. Okay, then we'll increasing the cell O11, the previous variable cost, by what is the inflation rate? 9.8%. And this P11 again increased by 1.098. Okay, I will get the variable cost, and the good news is that this variable cost will come in Yelanver because remember the variable cost for Yelanver 15960 per unit. How you get variable cost? The variable cost per unit into units. So it's N10 steric N11. Enter. Okay, and no need to solve others, just drag it. All the workings are coming, and this is in Yelanver, so I don't need to convert it. Variable cost has to be negative, so minus N12. Okay, equal to minus O12 equal to minus P12 and equals to minus Q12. Okay, you can eliminate the decimals as per your wish. It's completely your choice. Okay, and after that, just one more thing, then I will take the questions. Fixed cost. Now fixed cost should also come in Yelanver. Now the current annual fixed cost is Yelanver 4600 million, so minus 4600 million. But will increase by Yelanver's inflation rate from year one, so increase it by 22%. Okay, then increase this figure, the E7 by 14.7%. Then increase this figure by F7 9.8%, and then increase this figure G7 by 9.8%. So here you get fixed costs and variable costs and every stuff here. So if you have any questions in them, you can ask. I can repeat the workings. Okay, so it's a 5-minute session where we can take questions from your side. Okay, it's very easy to put it on a spreadsheet, and it's very easy to put it on paper pen as well. You just have to perform more calculations on paper, but here you need to perform it via spreadsheet. Here is your revenue, variable cost, fixed cost working. Any questions I can take, please? Meanwhile, I've sent the WhatsApp group link on your messages and chats. You can take this. A student is asking what is the best strategy to identify whether we multiply or divide. It's exactly the thing that you need to refer to quotes. Now note down the rates and decide where are you at the present. If your local currency is in numerator, it's a direct quote, you need to multiply. And if your local currency, the country where you are, is in denominator, it's an indirect quote, you need to divide. Yes, you can work to 2 decimal places. The shortcuts do work. Mira, you are right about the part material purchase, but I haven't reached that yet. Okay, I will be repeating variable cost calculation. Ahmed Junaid, why we should ignore fixed cost? All inflows, outflows need to be converted. Yes, you can use abbreviations. Mudassir, I have actually sent the WhatsApp group link, so you can join there and then you can see my number as well. So there are requirements. So Evelyn, that should be the case. The rate is multiplied by previous calculated cost, which already includes the inflation rate. That's what exactly you have to do. Because if in year one, the inflation rate is 10%, if the inflation rate is 10%, so in year one, it has to be 10%. And in year two, if it's 20%, so you have to take the increased figure and multiply it with 20%. So year one impact 10% will also come, and then year two 20% impact will also come. Now people are asking to repeat the variable cost working. So variable cost, you can see it was Yelanwe Rand 15960 currently, and increasing by Yelanwe's inflation rate. So what was the Yelanwe's inflation rate in year one? See, Yelanwe's inflation rate in year one was 22%, so I increased it by 22%. Okay, then in year two, I took the previous cost and increased it by the inflation rate, that was 14.7%. And in year three, I took the previous cost, increased it by the Yelanwe's inflation rate, that was 9.8%. Okay, and in year four, I took the previous cost and multiplied with inflation rate 9.8%. Once you get the variable cost per unit multiplied by units, you got variable cost in Yelanwe. Yes, Parth. There are many questions of technical nature of the platform, which unfortunately I won't be able to answer because the technical issues relating to platform has to be answered by Team ACCA. So better contact the relevant person for that. Bilal, I will share the revision plan on the WhatsApp group, which I have shared you. Okay, so since we have been sitting and studying for non-stop 2 hours, So better take a short 10 minutes break, water break or tea break, and then we will continue after the 10-minute break, where we will continue this question. There are 3 or 4 students who are messaging that the link is not working. So I am seeing here my WhatsApp is on with me that more than 100 students from this class have joined the group via this link. So it's better that you check again. I'm sending WhatsApp link again for those people who have some problems. I've sent it again. Yes, Mohammed Shabib, they will be accessible after the webinar ends. Yes, Fazan, you need to remember. Well, Faz, when 2 rates are given, it depends on quotes. If it's indirect quote, the lower is buying, higher is selling, and if it's a direct quote, the lower is selling, higher is buying. Okay, so we are resuming and there are a lot of questions again. Yes, recorded lectures are available. Now, what I'm doing is that there are some people who are finding it difficult to join the WhatsApp group. So I am sending my WhatsApp number to everyone. Okay, and those of you who are unable to join through this link, they can just drop me a WhatsApp text and I will send the link to them. Okay, so let's resume the class. Okay, so we are evaluating the financial acceptability of this assembly plant in Yilandwe. So once we are done with in evaluating the financial acceptability, we all know that since Amin is in USA, one student also asked this question, and it is investing in Yilandwe. So if you are in one country and investing in UK, all inflows outflows have to be in that currency, the UK pounds. So similarly, Amin is in USA, wants to invest in assembly plant in Yilandwe. So all inflows outflows have to be in rands. So land and building, plant and machinery, and this revenue, selling price into units. Always remember this formula, the selling price into units. But if it's in euros, you need to convert it into rand. Variable cost was in rand, so variable cost per unit into units, fixed cost. Okay, then the next cost, parts needed. This also has to come in Yilandwe rand. Working 3. So let's go towards the question. See, the part needed to assemble the components in Yilandwe will be sent from USA by Amini at a cost of $200 per unit. The parts needed to assemble will be sent at $200 per unit, from which Amini would earn a pre-tax contribution of 40 per unit. However, Amini feels it can negotiate with the Yilandwe's government and increase the price to $280 per unit. Okay, so we will be taking $280 per unit because I told you we have to be prudent. The parts needed will be sent from USA at a cost of $200 per unit, but Amini feels it can negotiate with government and increase the price to $280 per unit. Okay, so the problem is to assemble the components, the parts have to be sent by Amini from USA at a cost of $200 per unit. So if the parts cost is $200 per unit, which will be increased to 280, it needs to be multiplied with units. Can save time, copy paste the units, multiplied by the parts cost per unit. It's $280 per unit, so you write 280, increasing by the US rate of inflation because it's $280 per unit. So US rate of inflation is 5%. Had it been 5% constant, we would have dragged it, but N16 increasing by 5%, then O16, but now increasing by 4%, the US inflation rate, and P16 increasing by again 4%. Okay, so parts per unit multiplied by units will give you parts cost, but again the problem, this parts per unit cost was in dollar. So if you multiply it with units, you will get the parts cost in dollar. So multiply it N15, sorry, N15, Tarek, N16. And this is how it's going to work. So you just drag it. Okay, this parts cost is in dollars, but When you are in a particular country, okay, and you are investing in another country. So Ayman is in USA investing in assembly plant in Ilanwe. So I've told you all inflows, outflows have to be in Ilanwe rands. Okay. So parts cost, obviously, the parts needed will be sent by Amini. This is the cost for Ilanwe project, right? That it needs to get parts from Imani. It needs to get parts from Imani. So since the parts are needed to assemble components like material, this is the cost. Okay, but part cost has to come in rand, but we have parts cost in dollar. So we need parts cost in Ilanwe rand. So to convert parts cost from dollar to Ilanwe rand, we need an exchange rate having relation of dollar and rand. Now you have to convert dollar to rand. So you need an exchange rate having dollar and rand. So let's go back to the question. You have exchange rate having dollar and rand, this one. See why this is irrelevant, the rand and euro, because we have to convert dollar to rand. So you need rands and dollar relation. 120.1, 133.7. $142.5, 151.9. Now, $1 million question. You have parts cost in dollars. You need to convert it into rands. You need an exchange rate having rands and dollars. So you have rand per dollar. The last thing to convert, multiply or divide. Where are we at the moment? We are in Ilanwe, and the rates are rand per dollar. So Ilanwe's local currency rand is enumerated. It's a direct quote multiply. Okay, so multiply this N17 by this exchange rate N18. In worst case, you have to divide. That's the only two options. You get the parts cost, and you just need to drag it. Okay. So parts cost is the cost for plant, because the special packaging component, the special component is needed to assemble the components, and it will be brought from IMNE, so it's a cost for the plant. Minus N18 has to come here, N19, sorry. Or 20, or 19, sorry. P19. Q19. Okay, so this is the parts cost. Okay. Any other cost? Amani also expects royalties from the plant. Amani also expects royalties from the plant. So the plant has to pay them royalties. It is also a cost. This also has to come in Ilanwe and this will be shown as working for, because Imani, the US company, wants royalties from the plant. So plant has to pay them royalties. This is an outflow as well. I'm just mentioning working for here, then I will delete it to be able to create space for my further solutions. So the normal annual royalty fee is $20 million, but Imani feels it can negotiate with the government and increase the royalty fee by 80%. So again, Rudin says you need to increase it. Okay. Currently it's $20 million, but Imani feels it can negotiate with the government and increase it by 80%. So it becomes $36 million. And once agreed, this won't be subject to any inflationary increase. So it will remain 36. But again, the problem, this royalty is in dollar. I need everything in Ilanwe rand. So for that, I need an exchange rate having dollar and rand, which I have just discussed. Okay, the $1,000,000 question, multiply or divide. Where am I at the moment? I am in Yilandwe. So an exchange rate, you can see Yilandwe and the local currency is in numerator. It's a direct quote. You need to multiply. D17, steric T18. Drag it. Okay, and you have to just mention it here. Minus D19 minus E19 minus F19 minus G19. Okay, so I've written more costs. If you have any questions in these costs, you can ask, and then I will move forward. There are many students who are contacting on WhatsApp for questions. Here is your question tab on this GoToWebinar. Kindly ask questions here because I'm not able to see the questions during the class here. Okay, so we have taken the inflation rates of Europe by mistake, I think. Let me just get back to the question. Yes, it was a USA inflation rate to be taken, and the US inflation rate is 3%. Now that's where the spreadsheet role would come effective role. Mistakenly, I took the European rate. Now you can see the parts costs are inflating by the US rate. So I just have to increase 280 by 3%. Okay, and this will automatically correct everything. I don't have to worry about that at all. So it's N16. So I don't have to worry about it, and everything is corrected automatically. Actually, there is a very small difference between Q and O. So that's why I have to carefully observe whether we are writing Q or O. Anyways, uh, as far as Kshitij, your question is concerned, it would just be coming shortly. Okay, there are two questions. Why I took the parts cost as 280 when it was written 200, and why did I take the royalty as 36 million when it was mentioned to 20 million? Now listen carefully, investment appraisal is always done being prudent. Prudent means you overestimate the cost and underestimate the revenues. So the question states that current annual royalty is 20 million, but IMNE feels it can negotiate with the government and increase it by 80%, make it 36. So currently it's 20, but IMNE believes we can negotiate with the government and increase it by 80%, make it 36. So your outflow has to be 36, being prudent. Because if the negotiations are successful and you did your appraisal on 20 million, you will lose. So it's better, be prudent, take 36. Similarly, the current cost of a component which is being brought from IMNE, it's $200 per unit, but IMNE feels it will negotiate with government and increase the transfer price to $280. So if you do appraisal on 200 and then it suddenly becomes 280, you will suffer. That's why be prudent. Okay, now there are 2 or 3 questions that we have the answer key, and answer key has different answers than your. Now let me tell you one thing. That's a very important thing which I'm going to tell you. Now, since I am doing answer on spreadsheet, my answers are 100% accurate. There is absolutely not a shadow of doubt that my answers are incorrect. Why? Because I've taken the maximum rounding off I could have taken because of spreadsheet. But this is not necessary in the exam. Your answers may be different to mine. Answer key may be different to mine. You might have taken 2 decimal places. You might have taken 3 decimal places. For an exchange rates, you might have taken some other things. You won't be deducted any marks for this rounding of error. But if you are doing on spreadsheet, the people who are giving in remote exams, they have to be absolutely sure that their answers would be the most accurate answers on the planet. That's what spreadsheet is all about. Okay. So after that, there is tax allowable depreciation, which I have to take. So you all know that depreciation is always on plant and machinery. So 18,000 million is the Yelander and cost of plant and machinery, and straight line basis 4 years means it's gonna be Yelander and 4,500 each year. Okay, so when you take tax allowable depreciation, you have to take care of this thing that when I am doing tax allowable depreciation is always on plant and machinery, not on land. So plant and machinery, it's 18,000 million, and depreciation is charged on straight line basis. So for straight line basis, you have to make sure that it's cost less scrap value over life. Okay. Now, after you are done with the land and buildings investment, plant machine investment, revenue, variable cost, fixed cost, parts, royalties, tax allowable depreciation, okay, you need to deduct all costs from revenues to get taxable profit. Okay. Okay, once I deduct all costs from revenues, I get taxable profit. So here zero value should come. You can just write it, or you can use the sum function equal to sum. Which cells you want to sum, or you can just D3 till D10. Okay, so it's 39,000. Just dragged it. See, saves a lot of time, lots and lots of time. Okay, I took revenue, sum of all these functions, the revenue less all costs. Okay, empty cells don't count. You can add them or leave them. You get taxable profit. Okay, any problem with taxable profit? I'm deleting this working to create space. Okay, on this tax allowable profit, we have to pay tax. And what is the tax rate? Tax rate is 40%. Okay, on this tax allowable profit, we have to pay tax, and the tax is 40%. Okay, but you know that there was zero tax in the first 2 years as per the policy. You can see zero tax payable in first 2 years, an opportunity to carry forward tax losses and write them off against future profits made after the first 2 years. So you will do losses carried forward, okay, so you can't carry forward this loss in first 2 years, after the first 2 years. So loss carried forward is the loss which you made in year 1, that is minus 4360, and the cell is E11. Okay, you get taxable profit again. D11, E11, F11. So this can be G11. It has to be G11 minus the loss carried forward. H11. Okay, because the concept of losses carried forward is that if you incur loss, you don't have to pay tax. You should adjust it against future profits. And then when you get future profits, you need to adjust it, write them off against future profits. Okay, so on these taxable profits, we have to pay tax. I've just given them bold sign. So no tax here, no tax here, no tax here, because in the first 2 years, no tax. And 40653, we pay 40%. So apply 40%. on G13. Okay, so it's an outflow. So minus, and 40% on H13. Okay, after this tax, you need to add back depreciation and add back loss carried forward, because we just deduct depreciation and the loss carried forward to reduce our taxable profit to reduce tax. Obviously, they are a non-cash item, so you need to add them back, because in NPV only take cash flow. So just add back the depreciation. Each year it's 4,500. Okay, we added back the depreciation and added back the loss carried forward. It was only here 4,360. Okay, once you are done with this, you get cash flows after tax. So what are the cash flows after tax? From taxable profit, you paid tax, and then you added back depreciation and losses carried forward. So it should be sum of all these cells from taxable profit to D13 to D16. Okay, and I can drag it. So any questions? Still cash flows after tax? Okay, remember Rakibu Zaman, why we deduct royalties. Now, since Imani is in USA and it is invested in a plant in Yilandwe, so if it is asking royalties from the Yilandwe plant, it's income from Imani. Yilandwe plant has to pay them royalties, it's a cost. For those who are eager to do working capital, please wait. I know working capital is left. Taxable profits is just the revenues less all costs. It's taxable profit, Denise. Aaron, your question seems incorrect. In every question, we deduct depreciation to reduce taxable profit so that tax can be reduced, and then we add back. There is not a single question where we don't add back. So, Princess Onetry, sorry if I spelled your name wrong. The question states that losses should be carried forward after the first 2 years. So after the first 2 years, you always have to consider the first year. So first year is year 3 or year 4? Year 3, you have to deal in year 3. Non-cash means Mutasir, where the cash is not going. So see, depreciation, it's just an expense. The cash is not going. It's a non-cash item. So we deduct it to reduce taxable profit, to reduce tax. But since it's a non-cash item, we add it back. Janko Bass, we never use 13%, we use 40%. So Ossipier, if the production starts almost immediately, that doesn't mean sales start immediately. Had the sales been started immediately, it would have given us sales units of year 0 as well. But since sales units of year 1 were given, that means sales are starting from year 1. Wahab, you need to wait for that. Yes, Alan, you are right. No residual value, that's why it's 4,500. Now, after this, we are left with working capital. And it's working 5 I am making for working capital. So in working capital, you need immediate investment of 9,600 million rand, and it will increase by Yelande's rate of inflation from year 1. So year 1 inflation rate is, I think, 22%. So 9,600 million, you increase it by 22%. Okay. Then 14.8%, if I'm right. 14.7%. So this has to increase by 14.7%. The cell N22. And then 9.8%. So O22 has to increase by 9.8%. Okay. In year 4, it will be recovered, so no need to invest it. Okay. So in working capital, it's 9,600 million in year 0, right? And increase at the start of each of the next 3 years. So increase it by inflation rate, increase it by 22%. So to increase it, you need to take 11712. The N23 figure, 22 figure, minus the previous one already invested 9,600. Okay. Then the O22 minus the previous one, because we are just taking the inflationary impact. And then finally, the inflationary impact, P22 minus 22. So whatever working capital has been invested, you can just sum them all. 9,600 plus 2,112 plus 1,721 plus 1,316, whatever has been invested, it's the sum is 14,750. You need to recover it last year. Okay, so after working capital, everything has been done. So you get net cash flows. Net has to be written when you are sure that all inflows, outflows has been recorded. So you get net cash flows. Okay, so for net cash flows, it's the sum of which two cells, the cash flow after tax and working capital. So D17 and D18. Okay, and you need to drag it. So these are the net cash flows in Ylanwe Rand. I have done all the things before moving to net cash flows that I wrote: investment in plant and machinery, land and building, then revenue, then variable cost, fixed cost, royalties, tax allowable depreciation, get taxable profit, losses carried forward should be adjusted to get another taxable profit, then pay tax. After you pay tax, add back depreciation and loss carried forward to get cash flows after tax, working capital, net cash flows in Ylanwe Rand. Now, I wrote net cash flows when I was sure that all inflows, outflows have been recorded. But again, IMNE is in USA and it wishes to invest in an assembly plant in Ylanwe. So all inflows, outflows have to be in Ylanwe. And now this is the concluding thing. Then we will continue it later. When IMNE is in USA, now pay attention to this point. IMNE is in USA and it's investing in an assembly plant in Ylanwe. So all inflows, outflows have to be in rands. So you get net cash flow in rands. But being a foreign investor, IMNE is a foreign investor. It's based in USA. It invested in a project in Ylanwe, all inflows, outflows in rands. It got net cash flows. Net means the remaining cash flows in rands. It won't let that cash remain there. It will bring that back to its home country so that net cash flows become in dollars. They are also called remitted cash flows. Pay attention to this point. You should only do this remitted cash flows things when you are done with everything, because principally IMNE is based in USA and it wants to invest in an assembly plant in Ylanwe. So all inflows, outflows have to be in Ylanwe rands. Once you wrote all inflows, outflows in Ylanwe rand and got net cash flows in Ylanwe rands, you won't let that cash remain there. It's useless. IMNE is in USA. It earned money, earned net cash flows in rands. Won't let that cash remain there. It will bring that cash to its home country called net cash flows in dollars or remitted cash flows. So when you will remit or bring the net cash flows of rands in dollars, you need an exchange rate having rands and dollars, because you need to convert rands to dollars. So you need an exchange rate having rands and dollars. This is the exchange rate having rands and dollars. Copy paste it. And what was the zero rate, the spot rate? 101.4. IMNE was in USA, invested in an assembly plant in Ylanwe, all inflows, outflows in Ylanwe rand. When everything is done, you get net cash flows in rands after revenue, all costs, everything, tax, everything. You get net cash flows in dollars, Ylanwe rands. You won't let that cash remain there in that country. You will bring it back to your home country so that net cash flows become in dollars or remitted cash flows. Now, to convert net cash flows from rands and bring to your home country dollars, you need an exchange rate having rands and dollars. Have rand per dollar, you have exchange rates. The $1,000,000 question: multiply, divide. Where are you at the moment? Now, when you are remitting, you are in your country, USA. When you are investing in a project, you are in Ylanwe. But the project has ended and you're bringing money to your home country. Now you are in USA. So what is the local currency of USA? It's the dollars. It's a denominator. Here it becomes indirect quote. You have to divide. So divide the D19 by D20. Okay. And you can drag it. Okay, now see, in a single question, sometimes you are multiplying, sometimes you are dividing. It depends entirely on quotes. When you are in, you are investing, you were in yield way. So all inflows, outflows have to be in rands, and you were in yield way. The rates of yield rand was enumerated as a direct quote. You multiply. But when remitting, you're remitting to your country. You are in US. The dollar is in denominator. It's an indirect quote divide. Okay, so this net cash flows is the remitted cash flows. Okay, and for today the time is up. We have to end here. Now once this net cash flow is generated in US dollar, if there are any inflows outflows in US, you have to adjust them. That's it. Multiply by discount factor to get present value NPV. I have provided you the solution. You have the answer key as well. Completed this question. I will just discuss it shortly in tomorrow's session, because since in webinar we are short of time, we have to complete maximum stuff. So that's why we can't linger on to just one question. We have to do maximum questions. So that's why I would advise you that once you bring money to your home country, if there are any other inflows, outflows in your country, you need to adjust them to get the net cash flows and then multiply by the discount factor to find present value and NPV. Okay. Hope you enjoyed this session. Okay. I'm just here for 5 more minutes. If you have any questions with respect to these, please ask. I'm just seeing the questions. Wait. Yes, Sufyan, if that case is mentioned, then it's a separate thing. Huda, because they said that the losses should be carried forward after the first 2 years. So after the first 2 years means year 3. Naman, can you please repeat your query? Prithay, because it was written that working capital will need to be increased by the rate of inflation from year 1. Adorato, because tax is only on taxable profits, it's not on working capital. Yes, Mira, the working capital amount represents the changes in working capital. For us, I didn't take tax in year 2. You can check. Rituparna, the working capital has to be increased by the rate of inflation. So you're just taking the incremental working capital, the difference of both two. Yes, Abdul Wahab, net cash flows are remitting that. Ahmed, we transferred it to US because I was in US. If I'm in Pakistan, I invest somewhere else. I ultimately have to bring the money back to my home country. Yes, Tawanda, you can do it. Inflation amounts is sufficient. Yes, remitted cash flows are in every international appraisal question. Yes, Noman. Yes, Agnes, you can do that. Mira, this issue will be discussed in tomorrow's session. And apart from questions, how was the today's session? If you, some of you could please comment. Yes, Jagat, it's written that working capital will be released. If there is a scrap value at the end of the project, it's an inflow for us. We just record it inflow. For us, since I have to answer questions of 200 plus students, it's practically impossible to cover 2 questions in one class. If actually, sir, there are so many questions. So if anyone feels that his question was unanswered, I really apologize, and you can simply contact me on WhatsApp where I can answer your questions. Varsha, yes, that's the case. People don't come up with the preparation anyways. We are there to help them. Okay, thank you everyone for your great feedback and comments. So we will hopefully meet tomorrow with some new stuff. Okay, Wahab, wait till tomorrow for this or refer to the answer key. Thank you.